The United States just made a fatal mistake. By seizing Venezuela's oil assets this week, they thought they were punishing an enemy. But what they actually did was terrify their biggest ally. At 4 a.m. this morning, the Kingdom of Saudi Arabia officially responded to the Venezuela seizure, and the response is catastrophic for the US dollar. The Crown Prince has reportedly issued a directive to de-risk the kingdom's exposure to American banks. The logic is simple. If Washington can confiscate $60 billion from Venezuela today, they can confiscate $600 billion from Saudi Arabia tomorrow. The trust is dead. Saudi Arabia is not waiting to be the next victim. They are retaliating now. Sources confirm that Riyadh is quietly liquidating U.S. Treasury bonds and moving that capital into the only asset the U.S. cannot touch, physical gold and silver. This is not a drill. This is the end of the 50-year petrodollar agreement. The U.S. stole Venezuela's oil, and in return, Saudi Arabia just killed the dollar. Welcome to HistoFund. Today, we cover the backlash that changes everything. To understand why the financial world is freezing up this weekend, you have to look past the headlines. You have to look at the mechanics of what just happened in the Atlantic Ocean. The mainstream media is selling you a movie script. They are showing you the footage of U.S. forces capturing the leadership in Caracas. They are calling it a victory for democracy. But in the boardrooms of Riyadh, Beijing, and Dubai, they aren't watching a movie. They are watching a bank robbery. What terrified the global markets wasn't the capture of a dictator. It was the seizure of the assets that followed immediately after. Less than 24 hours after the operation, the White House announced that the United States would be taking control of Venezuela's oil production indefinitely. They didn't just freeze the accounts, they appropriated the physical commodity. We have confirmed reports that U.S. naval assets have already seized multiple tankers in the North Atlantic. Specifically, the Russian-flagged tanker Marinera and the Sofia were boarded and commandeered. These ships weren't just turned around, they were taken. The oil on board, worth millions, was declared property of the U.S. Treasury, ostensibly to repay debts and fund the transition. The administration has explicitly stated they will take up to 50 million barrels of crude oil and sell it to benefit the U.S. taxpayer. This is the Venezuela trap, and it is the single most dangerous legal precedent set in the last 50 years. Why? Because for the first time in modern history, the United States has effectively declared that sovereign immunity no longer exists. For decades, there was an unwritten rule in global finance. You can sanction a country, you can freeze their bank accounts, but you cannot simply take their physical resources and sell them for your own profit. That was the line between sanctions and piracy. This week, Washington erased that line. Now, put yourself in the shoes of Mohammed bin Salman, the Crown Prince of Saudi Arabia. You are sitting in Riyadh, you are watching the news, and you see the U.S. government declare that it is seizing 50 million barrels of sovereign oil to pay for administrative costs. You look at your own balance sheet. Saudi Arabia currently holds billions of dollars in United States Treasury bonds. You have massive investments in the U.S. stock market and real estate. Until yesterday, you viewed those investments as your safety net. You thought that money was safe because the United States respects property rights. But after the Venezuela seizure, those assets don't look like a safety net anymore. They look like hostages. The message Washington sent to Riyadh was unintentional, but it was crystal clear. We don't need to buy your oil anymore. If we get desperate enough, we can just take it. And if you hold your wealth in our currency, we can seize that too. This is why the reaction from Saudi Arabia has been so swift and so silent. This isn't a diplomatic protest. This is a liquidity crisis. Our sources indicate that the emergency meeting called in Riyadh wasn't about politics. It was about risk management. The kingdom's financial advisors are currently running stress tests on what happens if the U.S. freezes Saudi assets tomorrow. The result of that test is obvious: total exposure. Saudi Arabia realizes they are trapped. They sold their oil for dollars for 50 years. They took those dollars and lent them back to the U.S. government by buying treasuries. They essentially pay the U.S. to consume their oil. Now, they see the U.S. seizing tankers like the Marinera and erasing sovereign debt with military force. The risk premium of holding the U.S. dollar just went from 0% to 100% overnight. This is why we are seeing the de-risking begin immediately. Saudi Arabia cannot declare war on the U.S. They cannot fire missiles, but they can fire the dollar. They know that if they try to sell all their treasuries at once, they will crash the market and destroy their own wealth. So they are doing something smarter. They are executing a shadow exit. They are stopping new purchases. They are letting old bonds mature and not rolling them over. And most importantly, they are redirecting all new oil revenue away from the New York banking system. The Venezuela trap was meant to enrich the U.S. by seizing free oil. But the cost of that free oil was the trust of the only nation that keeps the dollar alive. The U.S. gained 50 million barrels of crude, but they lost the Saudis. To understand the magnitude of what is happening in the global bond markets this weekend, you cannot just look at the ticker tape. You have to go back to the source of the American empire's true power. It isn't the military. It isn't the Marines. It isn't even the nuclear arsenal. It is a secret agreement signed in a smoke-filled room in 1974. 50 years ago, during the height of the oil crisis, Secretary of State Henry Kissinger flew to Riyadh on a desperate mission. The U.S. economy was crumbling, inflation was skyrocketing, and the dollar was losing value. Kissinger made a deal with the House of Saud that would define the global economy for the next half-century. The terms were simple but revolutionary. The United States would provide absolute military protection and advanced weapons to the Saudi kingdom. We guaranteed their survival against all enemies. In exchange, Saudi Arabia agreed to do two things. First, they would price every single barrel of oil sold to the world exclusively in U.S. dollars. Second, and more importantly, they would take those massive dollar profits and recycle them back into the United States by buying U.S. Treasury bonds. This system, known as petrodollar recycling, is the engine that allowed the United States to run massive deficits for decades without going bankrupt. We could print endless money to fund our wars and our welfare state, and the Saudis would always be there to soak up the inflation by buying our debt. It was the perfect infinite money glitch. But today, at 4:01 a.m. Riyadh time, that machine didn't just stop, it was smashed. The seizure of Venezuelan assets this week was the signal that the protection part of the deal is void. If the U.S. government is now in the business of seizing sovereign assets instead of protecting them, the Saudis have absolutely no incentive to keep holding up their end of the bargain. This brings us to the Sandman Protocol. In financial intelligence circles, Project Sandman has long been rumored as the doomsday option, a coordinated effort by major non-Western nations to simultaneously dump the U.S. dollar to break its dominance. For years, mainstream economists dismissed this as a conspiracy theory. They said the Saudis would never do it because it would hurt their own investments. But looking at the bond yield charts this morning, it appears the operation has gone live. We are witnessing a silent liquidation. Saudi Arabia isn't holding a press conference to announce they are selling. That would be amateur hour. If they announced it, the price would crash before they could get out. Instead, they are executing a strategic, high-volume sell-off of U.S. treasuries behind the scenes, using dark pools and non-reporting intermediaries in London and Singapore. The mechanism they are using is devastatingly simple, and it targets the U.S. Treasury at its weakest point: the rollover. Saudi Arabia holds a significant portion of its wealth in short-term U.S. Treasury bills, T-bills, that mature every 30 to 90 days. Normally, when these bonds mature, the Saudis take the cash and immediately roll it over into new bonds. This keeps the liquidity trapped in the U.S. system. It keeps the Ponzi scheme going. But starting this morning, they stopped rolling over. When a $10 billion tranche of debt matured, the Saudis took the cash and walked away. They did not buy the new debt issuance. Even worse, sources indicate they are actively selling their longer-dated 10-year and 30-year treasuries on the secondary market. Why is this a financial nuclear weapon? Because the U.S. government is currently drowning in $36 trillion of national debt. To keep the lights on, the Treasury Department needs to issue billions of dollars in new debt every single week. They rely on whales like Saudi Arabia, China, and Japan to show up at the auction and buy that paper. If the whales stop buying, who fills the void? There is no one left. China has been selling for years. Japan is selling to prop up their collapsing yen. And now the Saudis, the lender of last resort, are selling to protect themselves from the Venezuela precedent. This creates a liquidity vacuum. In a healthy market, for every seller, there is a buyer. But right now, there are more sellers of U.S. debt than buyers. When that happens, basic economics takes over, the price of the bonds crashes. And when bond prices crash, yields, interest rates spike. This is the nightmare scenario for the Federal Reserve. We are already seeing the 10-year Treasury yield creeping up dangerously high in after-hours trading. If it breaks above 5% or 6%, it acts like a wrecking ball to the entire U.S. economy. Mortgage rates will skyrocket to 10% or 12%, instantly freezing the housing market. Auto loans will default. Regional banks, which are holding massive amounts of these crashing bonds as collateral, will face immediate insolvency. We are talking about a banking crisis that makes 2008 look like a picnic. But the Saudis know exactly what they are doing. They are weaponizing